Welcome to the podcast. I'm Eric Salzman, joined by Richie Bennett and Kevin Doherty. How are you guys?
Doing
Hello.
good.
How you doing?
Ask me what's up.
What's up?
Interest rates. Yeah, we're having a bit of a puke-a-thon this morning. Global global government, Japan, Germany, UK's up a lot. And we've broken to a level we haven't seen on the 10-year treasury here since everything kind of blew up in 23, I think it was, but we're at like 457 now on the 10-year. And to give you for the month we're up 28 basis points on the 10-year.
And
Um,
it's only May 15th.
right.
We're halfway through.
There's more to come. And not only that, but here's the frightening thing. If you look at where Fed fund futures and overnight index swaps, that's the two things that predict what the Fed's going to do at each meeting. Right now, the September meeting, 83% no move, and now a 15% move for a hike. And and if you go out to the December meeting, December 26th, a 50% chance that there's no move, a 39% chance that they go 25, and then the remainder is they go 50. There'll be two hikes, probably one in the September and one in the December meeting, and they'll go. So we've
What do you think will
completely
happen? What do you think could like that guy? They if they hike rates in September, right? It'll be whatever his second or third chairman Warsh. Like, will they just take him out? Like Trump will just be like, he's fired. If I fight me in court, I'll put guards at the front door of the Fed. He's not allowed in. Right?
yeah.
Hey, this guy's in like a bad
It's
spot.
going to be a long 2 years for Mr. Warsh. I'll tell you that. Oh man. Yeah, and another thing that I watch, when you look at, we'll just explain. So you have, we call the nominal treasury, I mean, that's the regular normal, 10-year treasury note that pays interest semi-annually and, just a normal bond. And then you have what's called treasury inflation protected bonds, they're called TIPS, right? And the TIPS basically reset, I think every semi-annually based on where the consumer price index is. So if inflation goes up, then those rates, those coupon rates that you get paid go up. So the theory is, and it doesn't always work perfectly, and obviously the CPI could not measure everything perfectly, but it's inflation protection. So unlike the 10-year treasury, which has a fixed coupon of 4 3/8, and if rates go to 5, you lose a lot in price. In these treasuries, or if I'm sorry, if inflation's going up, then interest rates generally go up, and then you get left behind in your regular treasury. But the tips adjust, right?
Mm.
So if you're taking away inflation, then we call that the tips are what we call the real rate, right? The real rate that someone requires to hold that bond to maturity. And know that they're protected against inflation. So that's the real rate. So the real rate on the tips right now, the 10-year tip is 2.07%, right?
Hmm.
So that is where an investor, the market would hold the 10-year protected from inflation. That they call that it could be called the term premium, right? That you're getting a premium for being out that long, 10 years, and there's 5 years and 2 years and 3 years. The tips kind of line up. So the reason we're talking about this is that if you take the 10-year treasury, 457, and you subtract the 10-year tips, 207, they call that the break-even inflation rate. And that's where the market believes long-term inflation is, right? So that right now is at 250, 2.5%. When we came into the war, it was about 2.3%. And it really did not move. Even when rates started backing up, that 10-year inflation break even of 234 around there didn't move. It basically stayed the same, which meant that this is just the real rates are going up. This has nothing really to do with inflation right now. But now all of a sudden we've exploded up to 2.5. And that's saying that now the market is starting to factor in the fact that, you know what? certainly that Fed target of 2% doesn't look doesn't look good and it doesn't look achievable. So now the market is pricing in about a 2.5% inflation rate in the long term, and that's a bit that's a big number in my opinion.
Yeah. I mean, and the trend is not our friend, right?
Yeah,
So if it keeps going, we still have oil at $100, right? People get nervous. I mean, this is like a significant move in the 10-year note
sure.
and globally, right? Like, I mean, England's got their own issues with politics, right? They got that, but I don't think it's just that, right? I think and Japan, right? Japan invests imports like all their oil, right? They
Sure.
don't they don't produce oil, right?
Hmm.
So that too, I think, is a factor, right? Like they're saying, "Oh, geez, we're gonna have high inflation here for the first time in a long time," right?
Right.
They had problems the other way, right? It was deflation in Japan forever. Now you
They
have,
wanted inflation. Now they got it.
yeah, here we are, and now their rates are right. Their bond market's higher rates since whenever, like 25 years, right? 30 years.
Yeah, their 10-year, the JGBs, Japanese government bonds, closed at 2.7% last night.
Mm-hmm. And for
That
years
they
they were
used
like
to,
zero, right?
yeah, I mean, there was a point when the Japanese, the part of their when they were doing their quantitative easing, they had a cap, and the cap was 0.5% on the on the 10-year JGB, and every time it would if it ever came anywhere near that, the Bank of Japan would just come in and buy, and then at one point, I think the Bank of Japan owned something like 75% of the entire market, meaning, and this is a big ass market, and so they were basically just buying the MOF was issuing, and then and they were just shipping it right into the Bank of Japan, and like nothing could go wrong, right? But now you're looking at this, and you got to remember when Japanese yields were so low, a lot of the big Japanese institutional, their insurance companies, the big whales, pension funds, they bought treasuries, right? So what they would do is they would say, okay, you know what, yields are too low here, but if I buy that 10-year treasury and then I hedge out the foreign
The U.S.
currencies from,
Treasury, the 10-year U.S. Treasury. You're
yes,
talking
Yeah.
about.
sorry.
Yeah.
If I buy that and I can hedge out the because they don't like to take the currency risk, so they'll hedge it out and they'll make sure that they'll do a swap that brings them back into yen. They've been doing that forever. Well, now
Yeah.
that you got a 270 yield over there, the math doesn't really work anymore, based on where the currency is and where the two rates are. So you always have that risk that a lot of these whales are going to significantly reduce their purchases of treasuries as they roll off. I don't think they're going to sell them, but they will let them roll off, at least a good proportion of them, to buy JGBs. And then that's it. There's no currency risk, and you get relatively an attractive yield. So there's all these things that kept our rates down for a long time. Number one was the Fed, and as we know, the Fed bought. I think we were when we got to 9.5 trillion. The Fed owns something like I think 6 trillion in treasuries. Well, they're not doing that anymore, and you got a new Fed governor. Granted, Richard, what you said last week is true. The Fed isn't a dictatorship, but one guy can't just make everybody do what he wants them to do. But certainly, the arguments are going to be going on about what do we do about this balance sheet. So when you got that, and then you got foreign, you have like Asia not showing up as much at our bond auctions every month, that's going to be a big problem.
Yeah.
It's really interesting that this has been the narrative since Trump got reelected, that the big foreign investors would repatriate their money out of the U.S. and the U.S. Uh, equity markets, fixed income markets, U.S. currency is just absolutely dominates the world market. And so if that starts to reverse, it could be a problem. And there was a report out a couple of weeks ago that offshore dollarization has actually been increasing over the last year and a half and not decreasing, which is so has surprised I think a lot of people because the narrative you laid out, it makes total sense. The narrative for Europeans to repatriate back into Europe, it makes total sense, but it hasn't really been happening, which is interesting.
Yeah.
Yeah. And maybe it's starting today. or the last couple of days
Yeah.
with the bond
Well, we're in for another gloom and doom podcast.
market.
But stay with us because by the end, Richie's going to give you his picks on the Preakness. So there's a reason to stay.
There's always optimism. There's always a
'Cause
light.
everything else is everything else is doomed. So without further ado, let's get into the article that Mike Mr. Burry wrote. I think Kevin, you sent that already. It's a Substack that he has.
Yes.
Yeah. So let's take it away with that and just maybe explain, guys, who Michael Burry is and then get into it.
So Michael Burry is famous for catching a couple of big downturns in the equity markets. The dot-com boom in 2000, the great financial crisis in 2008, 2007, 2008. But this thing did catch fire. Kevin was on ball to point it out to us right away. But all the major media outlets have picked this up now. And basically what he's saying is, he wrote this like missive that you guys in the media always say I'm negative and I'm always wrong because I'm bearish. And he said basically, no, I'm actually long. I've been net long for a long time in my career. And
Except for those two instances you point out where he was absolutely right.
Right. So then he said, you guys misquote me and don't fully understand the mechanisms when I say something. These reporters constantly say it, and then now I'm like a crazy meme that I'm like the idiot of the markets because I'm talking negative and they just keep going up in my face. And he's basically saying, no, I'm making dumb, right? But in this thing, he said, now I am being clear and I am telling you that I am short, right? So that's a statement, right? Like you guys might know half-assed what I'm doing, kind of, but here I am today saying, yes, I am negative on the market.
Now, Richie, can I interrupt 1 second? So when Michael Burry says I'm short, he doesn't necessarily mean he's like short the market, right? He may just be significantly underallocated to equity. You know what I'm saying? Like, is he?
Well, he said he's short the index and he's long a bunch of value stuff. And
Right.
and that's what he did in 2000, where he thought the tech stuff was crazy expensive and the value stuff, the stuff that Richie loves, was crazy underpriced. And he put that pair trade on.
Gotcha.
And he's saying that's the thing to do now. And he actually said most people shouldn't short because it's really, really hard to make money shorting.
Right. And it's very expensive to borrow stock and all that stuff. And volatility in some of these stocks for options is very high. So if you want to buy a put to bet that the stock's going down, it costs you a lot of money. So as a side note, back in 2007, I won't mention all the characters that were there, but if you've watched the Big Short movie, a couple of pals of mine were kind of leading the charge on that thing. Burry, I did not know, but I was at the dinner where...
And you should point out, I'm sure most people will know this, but in the movie, Michael Burry was played by, I forget the actor's name, but he was like the quirky guy with Asperger's.
Mm-hmm.
So he was one of the main stars of that movie.
The main guy, again, I won't say his name because I don't want to get in trouble, was a buddy of mine, is a buddy of mine. And he had heard about there was a conference in Vegas, the bond market conference. And we constantly talked about playing dice, me and my buddy. And so they do, in the movie, they show it, but there's like this dinner, right? This big dinner. And my buddy is trying to recruit people to short CMBS, mortgage market, like trying to short everything because he says it's going to blow up, right? The world is going to blow up. And he had been wrong, like wrong. And I think he was kind of on his last legs at his firm because they were like, dude, the market is going up the whole time. You're short. You're killing us. Like we're making so much money over there at that other desk and you're pissing it all away. Yeah, you're pissing it all away. And he kept going, boss, it's okay. I got it. So the key thing there was he got John Paulson, Burry, and others to join in. They were like, oh, yeah, yeah. You know what? Yep. You make a lot of sense. We'll put on that short. So I was at that dinner. They showed in the movie. And Burry's not like that quirky. They kind of Hollywooded him up. You know, he knows what he's doing. He might have Asperger's, but he wasn't that. So me and my buddy were supposed to play dice, and he's talking to these guys, and I kind of know what he's talking about, right? He's got them off to the side, like dinner's over. And I'm like, dude, let's go roll the bones. Come on, let's go. He's giving me this. I don't know if anybody played me in that movie, but I might have been the guy like trying to like wave to him, like come over. But he's giving me the finger, like, wait. I think he got Burry at that moment to sign up. And then we went and played dice. That was his whole thing. Like, and I saw it happen. It was pretty cool. So anyway, Burry is now saying that things are no bueno again, and he's now printing it, right? And that came out. When did you send it, Kevin? Wednesday? 2 days ago?
More than that, I think.
So whatever had happened, right? The market went down that day. Now it's back up, yes, on Thursday, but now it's back down again, right? His main point, which you got to kind of believe, it's math. His main point is not only are these tech companies' future earnings not so bueno based on what it is now and where they're going and where the stock prices are, but they're like fake news. He's like saying that like if they adhered to, and I don't want to get too wonky, but if they adhered to like GAAP, which is general accounting principles, the tech guys' earnings would be 40% lower than these already high lofty things. So when you read something like that, and it's like, oh man, this guy's called these markets too, and he's pissed, right? He's like telling people like, you idiots don't know what you're talking about, but he must have woke up one morning and just said, that's it, right? It was probably last week when all the memory companies and all the like SanDisk and all these other companies just started flying.
And it's like that's like Cisco back in 2000.
Right. And they led the downturn, right? It was like, it was, and then those, you know.
Explain to us the, so I think it's the accounting issue, right? Is they're basically calling income kind of future orders. Is that it? Where they're,
right.
Yeah. Okay. Yeah.
And I've actually got his note in front of me, and he says, in addition to the effects of stock-based compensation, I have discussed problems with depreciation policies, construction in progress, M&A costs, capital leases, and other necessary adjustments to GAAP net income to find true owners' earnings. And including all these adjustments, Wall Street may be overstating by more than 50% the earnings of our fastest growing, most highly valued companies.
So to break that down, right? He says that. We know he's a smart guy, right? Joe Shit the Ragman, who just buys those tech stocks because he likes to, and he's in his mom's basement, and he's on Robinhood, and he's like happy, go lucky, and everything's going up, and he's great. He doesn't know what the hell he's talking about, right? He doesn't care. He doesn't care what Burry's thinking. All I know is that stock goes up $50 a day, and I'm making dough, and I'm going to clubs and buying champagne. But the point is the smart guys, the really smart guys who know, like hedge fund guys, when they read that thing, they're like, okay, let's look at this. Like they're not saying he's some crazy country bumpkin. They know, like he's doing the math. And so some of them may fall on the path of, yeah, we got it, but we're just waiting for the thing to turn. Like we're still buying. It was the best month in 25 years for hedge funds last month. 25 years. Like stock picking hedge funds had their best month in 25 years.
Like all the chip.
It's like Jane Street. Oh my God. How much they made so much money.
Wasn't their bonus pool like in the billions?
Oh my, yes. There was another one that was even bigger. I forget who. It was like, oh God. So all these guys are piled in. So I think a lot of times they just look for the sign, right? Like, okay. And like I said, maybe 10-year treasuries do the trick, right? Like there's no real news. Like as of right now, today, Friday, May 15th, the market is down solely in my mind, because of bond market, right? The bond market is shitting the bed and rates are going higher, and that's scaring people because, on the surface, right? Trump just went to see his boy G, and they had a good meeting. Everybody was like, you can dig deep down on that one too someday, but on the surface it looks good, so everything should be great. Everything, earnings are good, everything. But it's going down today. The stock market is going down today because of the bond market. And if this continues, you will see further deterioration in the stocks. It's just going to happen, right? Like people know, like they'll shift. I think 4.5 was a magic number for the 10-year note, 4.5% yield.
Yep.
Five
We're
will be
we're at 458 right now.
Yeah.
As we come on the air.
and if it gets to 5, I think forget about it, right? Like then people will really be like, okay, I don't need so much in that risky asset of, tech stock X at 250 times forward earnings that might be fake. Like I'll take the old US of A for 5% for 10 years. Alex Trebek, give me that.
Yeah, really now the long bond is at 5 right now. The long bond is well over 5%. It's now 5.11. And I think people were waiting to see, like, it had breached 5% a couple of times. And great hedge fund trader once told me, like, you need 3 times. You got to breach, and the third one, if you can do it 3 times, that's when things go haywire. And I think we've breached. I think we're at the 3rd time, and suddenly we're at 5.11. So that's significantly over, over that kind of key 5% number.
Yep.
I really think the only way out of this mess is through a growth, call it a miracle, that this AI and AI plus robotics really does work and really is, about to hit the point in the curve and the adoption cycle where it just prints money, and you see productivity gains that are just beyond the most bullish forecast. And if that's the future, then forget about all these current earnings; they won't matter. But that seems like a pretty that's a bet with. That's a bet that when you're saying this time is going to be different and we are really about to see the next industrial revolution, it's like, okay, but what if that doesn't work out that way? It's hard to see another clean path through.
Yeah. I just and we talked about it in the past. I always trust the bond market before the stock market, right? And I don't mean to pick on Joe Shit the Ragman again, but he doesn't know, right? And Joe Shit the Ragman is a term like regular Joe. He doesn't know. He knows where Microsoft stock is, right? He knows. He watches CNBC. He knows. Only the big boys and girls are involved in the bond market. Only them.
So the Robin Hooders are not trading interest rate swaps?
Not today. But if you give them a yes or no on the Kalshi, they might. Swap spreads today will go above this. So I always trust it. And, it's basically showing right now we're getting a little ahead of our skis in the old equity market.
Richie, you remember back in now this whole idea, Kevin, just this whole monkey business thing started on Bloomberg, where Richie and I would basically just go back and forth and make jokes and talk about the markets, and we were both at firms in 2007 that were both feet and both hands and everything else into subprime and commercial CMBS and all that stuff. And I remember, and I was Richie and other guys were like, it's like we're in the bond market because we were both in the. It's like we're watching a slasher film, and over there in the equity market, it's like they're watching a Disney film. They're watching one of the old time, and I mean, we'd be sitting there, and you'd be seeing, like, I remember, like, this was like mid 2007. Big boss gets up and he gets us all in a room and he goes, "This firm no longer buys secondary CMBS, meaning secondary, like it's not new issue. We only sell new issue. We don't buy anything. Like in other words, like all bets are off. Don't do it. If anyone calls you up for a bid, you tell them, sorry, I can't do it. And that's it. Because you know what? That guy's probably not going to be here by the end of the year. So don't worry about losing his business because this business is over. And again, it was like, and the stock market, Bernanke was kind of like, it's a $20 billion problem. It's okay. And that was the famous, it's contained. And then eventually, when the equity market got the tap on the shoulder finally, that's when the real fun started. So,
Yeah.
Again, trusting the bond market is a hell of a lot. I'd say the bond market's telling us we got some rough times ahead.
And it can change, right? It can change. But
Sure.
just this trajectory the last few days, and it's coming into the summer, and it's coming into midterms for elections in the US. It doesn't smell good. Doesn't smell. And it's gotta impact, so if you don't know, you should know. The 10-year note drives the entire, commercial loan market for everything: cars, homes, furniture purchases, whatever. Prime rate, they can. So, we were starting to get good news on mortgages. Rates were coming down. Now they bumped again. They're going to bump again next week, right? That's not going to help the housing market. Right? Like people are going to be like, F this.
Yeah, and we got now granted we're like I guess 6.5% or so now on I haven't looked in recently, but kind of the primary mortgage the rates offered on a 30-year about 6.5, 6 5/8
Right.
now.
Yeah.
Remember, right before the war, that actually finally breached 6%, was in the fives.
Right. And it looked like it was going even lower.
And when this happened in 2022 and into 2023, when all of a sudden inflation was rampant, the 30-year fixed rate mortgage got to nearly 8%. It got up into the high sevens. Didn't stay there long, but again, like there's just the housing market's relatively in the shitter right now, and this ain't helping.
Nope. Just as an aside to talk about our prediction markets and things, Interactive Brokers, who is a firm that people respect, been around a long time. They seem to be cutting edge. They've announced an entry into the prediction markets. So right now you can go through Kalshi, I guess, on their website, Interactive Brokers. They're going to set up their own prediction mechanism, but they will not be offering sports or pop culture or any of those kind of wagers, investments. Economy, I think climate, and politics. So what that means is they think there's something there, and they're trying to bring not, again, JSTRM, Joe Shit the Ragman. They don't want him doing this. They don't care if he doesn't, but they want the institutions. So the institutions are more likely to play in those more, serious markets. We don't care who shows up to the Academy Awards, but we do care, is GDP going to be 2% or more or less? What's the inflation rate going to be? So I find it interesting. So they must see there's a market there for growth. Otherwise, they wouldn't be doing it. And like we said last week, and weeks before, like Goldman Sachs has expressed interest in the prediction markets. And
Richie, so who will be like, so this will be interesting, right? Because is it kind of the same as high frequency trading with selling the order flow? Like, will they basically sell the order flow to the real sharp guys? Like, in other words, will markets get made in their thing?
Well, I doubt it because, I mean, unless they get some, sucker. But I think all they care about is wanting to build a business amongst institutions. So I think they're going to go about it the right way in the sense that let the two sharks fight each other. Again, we don't have a position. We're brokering.
Right.
We just want volume. So like you guys go at it, fight it out. I'm at market, and so yeah, I don't think, and they're not famous for that either.
Mm-hmm.
Interactive brokers.
So that'll be an incredible market info, right? That you'll be, because you got to imagine every algo is going to be tied into that, because I think you or Kevin said it a long time ago. Oh, sorry. Um, uh, sorry. A long time ago that, yeah, people say what they're going to say and they'll give quotes and whatever, they'll write a research paper, but where are they going to put their money? And that's what matters, is where guys put their money on the line. And that usually yields some really good information.
Yep.
I think ignoring pop culture is a mistake. So I've got my Polymarket page open here because I was going to reference it in a moment when we talk about the Crypto Clarity Act passing. And along the right side of the page, they highlight other markets that you might be interested in. I guess I don't know how their algo works, because the ones they've got highlighted for me: new Rihanna album before Grand Theft Auto 6. They've got a market in that. And here's an interesting one: will Harvey Weinstein be sentenced to no prison time? So
I think he's going to die. Somebody said he had like heart palpitations or something.
So what do you think the odds are in that?
I don't know.
We'll do,
that's got to be interesting. I thought you were going to say, like, will Timothy Chalamet, the it actor now, be seated in the front row again at the Knicks game next week?
No, this one's more fun. So according to Polymarket, the odds of Weinstein getting no prison time are 31%, which is a lot higher than I would have thought it would
Oh,
be.
way higher.
Mm-hmm.
That makes me wonder.
Maybe some of his buddies, some of his lawyers are trying to paint the tape, because there's just under $1 million of volume in that market. So
Really?
they're trying to influence the judge there.
I'm telling you, I saw the article in the New York Post, I think yesterday. Heart palpitations for Harvey. So that might be part of it. Your Honor, let the man die at home. He's going to get him to the hospital. But
or if he dies before sentencing, there is no sentencing.
Exactly.
So if you're a cardiovascular doctor and surgeon, maybe you've got insight.
Yeah, you call your cousin and you tell him, bet with the Harvey Weinstein.
Wow. See, we
laugh, but like, this is what's going on. You realize that, right? Like those guys that bet that Venezuelan thing, like, they were waiting, right, for the big meeting by the big guy in the White House to say, let's go. And that's what they bet, because they bet the date, right? It was like, will Maduro be out by, next date?
End of the month,
yeah. And somebody was like, yeah, the big guy said go. The mission is on. Today? Yes, right now. All right, let's go.
Hold on, I got to do something. All right. Well, let's see. What's the next depressing topic?
Well,
Kevin,
we teased it. Might as well talk
Act?
About it. Yeah, the Clarity Act. The Senate Banking Committee had their markup session yesterday, and it passed out of committee by a vote of 15-9. So 2 Democrats supported passing the Clarity Act. 2 Democrats that are on the Banking Committee. So now they merged the 2 bills. The Senate or the Agriculture Committee has their bill. The Banking Committee has their bill. They merge it into one. It goes to the full Senate for a vote. And the Polymarket market I was just referencing on, is the Clarity Act going to be signed into law in 2026, is now showing a 68% chance. And
really?
It barely moved on this this move yesterday. It's basically bounced between, call it 55 and 65% for most of this year. I caution again, though, there is very little volume in this market. It's only $913,000 of bets that are on the line, which for something this big, I don't know how much signal is really there. This is just a bunch of small bets. There's clearly no whale bets in here. And the problem with the Clarity Act, I still don't think this is going to happen. And I'll tell you why. Maybe it passes the Senate but to pass the Senate, it needs to get 60 votes, which means it needs to get 7 Democrats to vote for it. And the Democrats have said very plainly that the bill must have language in it, ethics language that prevents members of the president, his administration, and Congress cannot have an economic interest in projects that benefit from this regulation. So basically, no crypto projects. So if you own equity in World Liberty Financial, for example, under this legislation, that would be banned. And the Democrats have said they'll only pass this if that language is in there. Fine, let's assume that happens. Well, Trump has said he's going to veto any bill that has that language in it. So you can't satisfy both parties. And here we are, you mentioned the midterms are coming up. It's the middle of May already. There's a very short time window to get this passed before they all go away on summer recess. And when they come back, nothing gets done between then and the election. So I think I still don't think it's going to happen. I think this 68% is way too high. I would flip it. I'd say maybe it's a 32% chance of passing, not 68%.
So have you put your investment down on Kalshi or Polymarket?
I guess we're all friends here. We believe in openness and clarity. My access to my Polymarket account got blocked for some reason. So I'm
maybe
unable to
because you're a famous podcaster now.
I don't know.
Right.
I'm unable to
too much
place new.
influence. You're an influencer.
Yeah, I'm an influencer. Yeah, so I cashed out my Super Bowl bet, and I can't make any new bets since then. So
Well, you let me know when you do. If you bet against this, I will join.
If I were able to, I would bet against this right now. I think it's and part of that is, look, it's a natural hedge against being long crypto, because clearly if this does not pass, if it all falls apart, that's negative for the crypto market. And so, if you can basically get 3-to-1 odds as a hedge against your crypto position, that's not bad.
So what about a little politics? So okay, so the midterms are coming up, and probably a good chance that the Democrats are going to regain the Senate. And I don't know.
It almost always happens, right? The incumbent party loses.
Well, the House, the Senate's a bit different because of which seats are up for grabs. I'll take a look at what the current Polymarket odds are while you guys are talking.
There we go.
Because the question you have to ask, right, is could the Democrats get to like high 50s, and then if 3 Republican senators like Susan Collins, all them pile in to break a filibuster?
Yeah, it could happen.
Look, he says whatever he wants. It doesn't matter, but he'll just say it anyway. But Mr. President, why are you vetoing this bill? What's he going to say other than, because I've made $1 billion doing this? I mean, he can't. Like, what other reason would they have not to just say, yeah, you know what? If you're in Congress or you're in the White House, you can't have a vested interest in crypto.
Yeah.
Right.
Well, current Polymarket odds are which party will win the Senate? Republicans 55%, Democrats 47%. It's slightly over 100% because I guess the VIG. And then which party will win the House? 79% Democrat, 22% Republican.
I'm surprised that they think the Senate will stay, but maybe.
And so Democrats sweep both houses, 44%.
You know what it is with just the politics again is that, you always wonder, how does this guy keep getting or gal keep getting reelected to another 6-year term? And what you forget is what they do. All we see really for any senator outside of our state, right, is we see what they vote on in the Senate and where they are on war and all this other crap, right? But what they do at home for their constituents that's why, because everybody hates Congress, right? Everybody says Senate, everyone, they're full of shit. But so how do these incumbents keep getting reelected time and time again? And it's because I remember when Hillary was the senator from New York, no one gave, I mean, people gave a crap, right? But no one really gave a crap in New York about where she stood on different issues that were voted on. They cared the fact that she was bringing money home to the state. She was getting, and that's what they do. They get contracts, they bring money into the state, they help their constituents out, and that's why they get reelected.
And
So you're
that
probably right with this whole She's still saying the Senate is probably going to stay Republican.
that guy we talked about him before, in Nate Silver, who would do those polls. He did a poll. I don't know I think when he first started, and it was people didn't hate Congress as much, but they still kind of hated him. And he asked, "How is Congress approval rating? Do you like what they're doing or not?" And it was like whatever, 40% no, 40% yes, 60% no. Right? How is your representative? And it was like 80% yes. And it's so funny, like, right? Like, just like you said, like, no, my guy, he fights for me. The rest of those idiots, I don't know what they're doing.
It's kind of like the opposite of sports. People are like, I love football, but the fucking Jets, God, they break my heart. So hate your local team, but you love the big game.
Right.
Why do you have to hurt Richie like that?
I did see an important thing, which was every day in October and November coming up, 61 days, there will be at least one college or pro football game on the TV. That's never happened before. 61 days of
Does that
football.
have something to do with the online gambling, you think?
This is
I think so. Or Kalshi or Polymarket. Yeah.
Right.
this is bread and circuses. They know we love football, so got to keep us entertained.
Yep.
Live sports. That's big for media. Live
Okay,
sports.
so we covered, let's see, bond market puke check. Michael Burry calling to the end of the world check. Clarity Act probably not passing check. All right. So now we're gonna have now let's have some positive fun.
Okay.
End this on a good note. Richie, take it
Yay,
away with the
sports.
Preakness.
Yay, sports. Yay, live sports.
Yeah.
You never know what's going to happen. That's what you have to watch.
Tip your dealer.
You can watch whatever favorite show you have. You can rewind it. Unlike in the 70s where you had to catch it when it was live, or 80s. Now you can just rewatch it. Live sports, I mean, you can watch a rerun of a live sports game, but I think you won't because you already know who won. But we have some horse racing this weekend. It's the Preakness Stakes from Laurel Racetrack, which is different because Pimlico Racetrack in Baltimore, Maryland, used to host the Preakness for years. They are renovating Pimlico Racetrack. So this year it's at Laurel Racetrack, also in Maryland. And today, the Black-Eyed Susan, which is the best 3-year-old girls, run at Laurel for, I think it's a mile and an eighth. So in the Kentucky Derby, and most of the time, if I'm watching horse racing, the Ortiz brothers are like the best jockeys on the globe. Jose and Irad. Irad's a little older. He's a little better. Jose's kind of climbing up, though. So I bet them a lot. Like we joke, the Ortiz brother exacta. But it doesn't pay anything usually, right? In New York, it just, like everybody, that they're based in New York, but they'll go to like Florida together and stuff like that. It rarely pays a lot because everybody knows they're the best. Well, that was the fatal flaw of my Kentucky Derby picking because for once, the Ortiz brothers would pay a lot if the two of them came first and second. Guess what happened?
What happened?
They came first and second. The younger brother won. Jose beat the older brother, who's still not won a Derby either. 23 to 1 over 6 to 1. Good Lord. That was a mistake. But today in the Black Eyed Susan, they're both riding pretty good girl horses, the fillies, but I'm going to play those. So it's the 10, My Miss Mo, which Irad is on, the older brother. And the 5 is Bracken Papa, ridden by Jose. And I think Irad's going to beat his younger brother in this race today, the Black Eyed Susan for the 3-year-old fillies. Tomorrow is the Preakness, a nice race, the 151st running of the Preakness Stakes, which is amazing. I hope
is that the oldest one of the big 3?
Kentucky Derby, I think, is the oldest still. I hope it doesn't get bet too much, but there's a great story on the 1 horse Taj Mahal in the Preakness tomorrow. It is a husband and wife team, and they dominate Maryland horse racing. And this race is in Maryland. Brittany Russell is the trainer, the woman. Sheldon Russell is her husband, the jockey. They crush it, and nobody knows who they are unless you follow sport. And so I don't think they've been in a Kentucky Derby or anything like that. But I'm really hoping for them to show up tomorrow in their own state. I'm just hoping that not everybody in the place bets them because they've heard this story now. Because, I think it's NBC that covers the race. They're going to run, a 20-minute show within the show on the 2 of them, right? It's a feel-good story. They got 2 little kids. It's very nice.
What are the current odds?
5 to 1. Okay. Taj Mahal. And then the other one I like, and I'm going to play a 2-1 exacta box, is Ocelli is the 2. Ocelli is owned by 4 people that are listed, 4 groups that are listed. It's a great story. I love this because I think what happened here was they all sat around one day last year and they were watching the races and they were like, we should buy a horse. Yeah, okay. How much you got, Joe? I got $3,000. You? I got 3. Yeah. All right, let's all go in. There's 4 of them. They paid $12,000 for this Ocelli horse. $12,000.
Wow.
It has made $600,000 so far. He is, I think, 6 to 1 tomorrow in the early line. He's in the number 2, Ocelli. But what he did was a funny thing 2 weeks ago, and he's the only guy who's coming back. He ran in that Kentucky Derby, and he was like 75 to 1. And the 2 Ortiz brothers were riding up the stretch, and this guy kept plodding along, and all of a sudden, he just catches it. Those 2 finished neck and neck. He came right behind him at 3rd. 75 to 1, he came in 3rd. Mm-hmm. And the horse that won, Golden Tempo, and the horse that came in 2nd, Renegade, not in this Preakness. So why not play the 3rd place horse that doesn't have the 2 guys that just beat him tomorrow? So 1-2 exacta box in the Preakness, 5-10 exacta box in the Black Eyed Susan today.
All right. Good luck, players.
Exactly.
All right, guys. I think we've depressed ourselves enough. All good. And see you next week.
See you next week.
See ya.